Hello, and thank you for joining us today to learn about this new opportunity for individuals with disabilities to save money and not risk losing vital public benefits. I am Amy Corbin. I am the Executive Director for the Indiana Able Authority that oversees the administration of InvestAble Indiana. It is important to note that going into this presentation, this is a pre-recorded webinar, so there is not the ability to engage in questions and answers during this presentation, but I will go through a few frequently asked questions toward the end of the presentation to help answer any additional questions that there might be, as well as give contact information in case you need additional information. So the Indiana Able Authority is a quasi-governmental agency operating under the umbrella of the Indiana Office of the Treasurer of State. We are overseen by a board of 9 members that includes the state treasurer as the chair of the board. The director of state budget agency sits on the board, as well as the secretary of FSSA, the executive director for the Indiana Housing and Community Development Authority. We also have a member of a statewide advocacy organization, an expert in financial planning, an individual with legal expertise in estate planning, a family member of an individual with a disability, as well as an individual with a disability who sits on our board to help oversee the administration of the plan here in Indiana. So to give you some background on ABLE and what exactly is ABLE, it started out and is the Stephen Beck Jr. Achieving a Better Life Experience Act of 2014. This act allows for tax-free savings accounts for some disabled individuals to save for qualified disability expenses and not risk losing their public means-tested benefits. I do mention that not all individuals with disabilities are eligible, so I will expand later on in the presentation on exactly who is eligible. These programs were established, or this plan was established as a 529A qualified ABLE program. Some individuals may be familiar with 529 college savings plans, and if you hear 529A reference, that just means a qualified ABLE program. The assets in and distributions for qualified disability expenses in an ABLE account will be disregarded or given special treatment in determining eligibility for most federal means-tested benefits, such as SSI and Medicaid, and will not affect the benefits in that plan. So ABLE accounts are intended to supplement and not supplant or completely take the place of other benefits. ABLE is another tool in your toolbox and can, and perhaps in some situations should be combined with other resources to help an individual depending on what their specific needs and circumstances are. So to give you some background on how InvestAble Indiana came into being, on the federal level, in February of 2013, the ABLE Act was introduced in Congress and was later signed into law by President Obama on December 19th of 2014. The ABLE Act amended Section 529 of the Internal Revenue Service Code of 1986 to create these tax-free savings accounts for individuals with disabilities. But the bill did not in and of itself create a program. Instead, it gave the states the ability to do so. So once Indiana had the authorizing federal legislation to implement and administer a plan in our state, in January of 2016, Senate Bill 11 was filed by Senator Kenley, and it eventually passed through all committees and both chambers unanimously as a bipartisan effort of the Indiana General Assembly. It was eventually signed into law on March 21st of 2016, authorizing Indiana to launch and operate its own plan. On the journey to InvestAble Indiana, Upon board formation, the board looked at several implementation options, considering whether to launch an independent plan here in our state, run solely by our state, or partner with another state, or even they considered joining an alliance of states. After a very thoughtful and careful analysis of which option would be the best for Hoosier residents, the Indiana Able Authority decided upon joining the National Able Alliance. And this is a partnership with 15 other states that has easy to understand investments and offers an inexpensive and user-friendly product for the beneficiaries of the plan. Additionally, it allows us to pool our resources and share and advise upon best practices such as what is working and what is not working. It also gives, again, the most variety and lowest cost of investment options for the beneficiaries. We also have a debit card option, which is very unique to our plan. So eventually, Investable Indiana launched on July 27th of 2017. To give you an additional reference, or to add to your reference point in considering an Investable Indiana account, this is not just a plan for people of means. There are very affordable contribution and plan management amounts. Additionally, it's not just for people who work and need to save money for expenses. It's also for families with young children, because it's very important to start saving young and early to help meet the needs as a child grows and ages. We do offer long-term investment options, and that offers the opportunity or possibility to see growth over time. In looking at eligibility, determining eligibility, whether or not someone can enroll in an Investable Indiana account, the disability must be present prior to the age of 26, and if you meet one of the following criteria, you can be eligible. So if you're eligible for SSI benefits based upon disability or blindness, or if you're eligible for SSDI benefits based upon blindness or disability. If you're not receiving either of those two benefits, you can self-certify that you have a similarly severe disability. Eligible individuals can either open the account for themselves, or an authorized individual, such as a parent, guardian, or power of attorney, can open an account on their behalf. So, in an additional note, someone over the age of 26 can have an ABLE account. They just have to have that onset of disability prior to the age of 26. So essentially, they're going to be an eligibility meeting the severe functional limitation criteria outlined in either Title 16 or 2 of the Social Security Act. Under self-certification, if an individual is not receiving SSI or SSDI benefits, they can potentially self-certify for an ABLE account if they also meet that age of onset criteria. And under self-certification, they must have one of the following, and that is either blindness as defined by the Social Security Administration, or a medically determinable physical or mental impairment with marked and severe functional limitation that has lasted or expected to last at least 12 months or result in death. And this certification, you must have a written disability-related diagnosis signed by a physician, and be able to recertify annually if and when requested, and maintain eligibility verification in your, have that in your possession. So if a mental health provider has given a diagnosis of disability, this can be acceptable. I understand that sometimes it's not always a physician, it might be a different mental health provider or a psychologist that the individual and their family may be working with. So we encourage that mental health provider to collaborate with a licensed physician to confirm and outline this diagnosis. Essentially, they're going to be, again, meeting the Social Security definition of disability, but you may not be eligible for Social Security benefits according to their guidelines, but you could still be eligible for an ABLE account. So with having an ABLE account, what are qualified disability expenses? This is a very commonly asked question. What can I spend my money on, and what can I use the funds for in my account? A qualified disability expense is really broadly defined and as any expense that is incurred as a result of living with a disability and intended to improve your quality of life. Qualified expenses include, but are not limited to, any of the following. So this is not an exhaustive list. Those expenses can be education, health and wellness, housing, transportation, legal fees, financial management, employment training and support, assistive technology, personal support services, oversight and monitoring, even funeral and burial expenses, or even prepayment of those costs. So it could be services and supports maybe that are not covered by the current benefits an individual is receiving. Supports like maybe personal assistance that aren't fully covered or that are limited to a certain number of hours or days per week. I frequently get the question as to whether or not the money can be, the funds can be used on travel expenses such as going on vacation. You just want to really be sure that the expense is directly related to living a life with a disability and intended to improve or enhance the individual's quality of life. So if you were planning for a vacation, certainly the funds in the account could be used for assistive services or support on that trip. If they needed certain accommodations or say a nurse or some sort of staff that needed to go with them to give them that support on the vacation, that could certainly be covered. In terms of other expenses related to the trip, I would certainly recommend that you consult with a qualified professional to determine, legal professional to determine whether or not it would be considered a qualified expense. So any other expense that improves the health, independence, and quality of life. Even basic living expenses that help to allow for this increased financial independence for an individual. If the funds in the account are used for housing withdrawals, those funds need to be used in the same month that the withdrawal was taken. Otherwise, the extra amount could be counted as a resource for that individual. So for example, if someone withdraws 2 months worth of rent from their Investable Indiana account, they need to make sure to spend that or pay that money to give that money to the payee in that month that it was withdrawn, and not hold back that second month's worth of rent. Otherwise, it would be counted as a resource by other benefits they may be receiving. ABLE accounts can allow for funds that are counted in a $2,000 resource limit. Can be used for things like leisure activities. So instead of having to money having to be saved or used for the disability or functional expenses. So an ABLE account could help free up, so to speak, the funds within your $2,000 resource limit to use those toward leisure activities, and use the funds in your ABLE account to pay for those qualified disability related expenses. Like I said, qualified disability expenses were intentionally broadly defined. We'll see how and if this changes over time, but ABLE was intended to allow for more financial freedom and empowerment. And it's just important to keep track of your expenses. As the ABLE Authority, we cannot provide tax or legal advice related to a qualified disability expense, and the beneficiary on the account needs to be able to certify under penalty of perjury that the expense was related to improving their quality of life and was necessary for that individual. The special tax advantages with an ABLE account are that the ABLE savings may grow and be withdrawn tax-free, provided that the savings are used for qualified disability-related expenses. When savings are used for non-qualified expenses, the earnings portion of the withdrawal will be treated as income, so it will be taxed at the account owner's tax rate and subject to a 10% federal tax penalty and any other applicable state taxes. So post-tax dollars go into the account, and again, the income earned on the funds is not taxed if used for a qualified disability expense. The withdrawals are tax-free as long as it's used for a qualified disability expense. And additionally, the contributions are not federally tax deductible, and donations or gifts into an ABLE account are not tax deductible, such as a grandparent giving into an ABLE account, because it is not a 501c3 nonprofit charity. There are no current state tax credits or deductions with an Investable Indiana account. Some states offer deductions, but no credits are available to my knowledge right now with any ABLE program. There are about 35 states with active plans nationally at this time. In regards to the retirement savings contributions credit, otherwise known as the Savers Credit, some beneficiaries may be eligible for this or have access to it. It's just important for them to speak with a tax advisor regarding their specific circumstances. So the money, how much can you save in your account, and how will it impact my benefits? Let's touch on that. The balances of $100,000 or less are excluded from an individual's SSI resource limit if they're receiving that benefit. Only the amount over $100,000 is counted against your limit, along with assets in other non-ABLE accounts that individual has. If an ABLE account exceeds the $100,000 limit, then SSI benefits are temporarily suspended until the account balance no longer exceeds that limit or drops beneath that limit. It's important to note that that monthly cash benefit is what is temporarily suspended. They do not lose eligibility for SSI if their account exceeds that limit. But with that being said, it is important to keep track of your account and make sure that if you're receiving SSI benefits that you're not approaching that limit. You do maintain Medicaid eligibility regardless of the account balance. Medicaid, there is the possibility of Medicaid payback after death of the account owner, but only after all other outstanding disability-related expenses are paid. So Medicaid can only request payback for services that were provided during the time in which the ABLE account was open. Medicaid is not federally required to seek payback, but states have the ability to do so. Otherwise, funds would revert to the beneficiary's estate after death. If there are funds remaining in an ABLE account after funeral and burial costs, then that, again, the funeral and burial costs can be paid for out of the ABLE account, and it could be in some circumstances that the amount in the ABLE account is exhausted prior to Medicaid coming in and seeking repayment of funds. But if there are repayment of funds or if there's no repayment of funds and there is money left in the ABLE account after the account beneficiary has passed away, the funds can be transferred to an eligible sibling with a disability. For contributions to an ABLE account, there is only one account allowed per owner, but anyone can contribute into an Investable Indiana account. With Investable Indiana, we do have a unique UGift feature. This is a code that is given to an account beneficiary and can help them to sort of crowdfund their ABLE account if they cannot fund the account on their own. So friends or families or other supports can gift money into the account. It's just important, I think, to let other funding sources to know about what your savings goals are and what you're trying to achieve and save for with your ABLE account to help give an idea and perhaps enhance or increase contributions. or gifting. Excuse me. There is a $15,000 annual contribution limit. This mirrors the annual gift tax exclusion, which is periodically adjusted for inflation. And this amount is the total contributions from all sources, such as from the beneficiary, family, friends, etc. An employer can decide to match contributions, like with a 401k. You can even direct deposit funds into the account, such as from a paycheck. If an individual is not receiving SSI benefits, they can save additional amounts over $100,000, and so their aggregate contribution limit can be $450,000, and this is the state limit for 529 contributions. This amount is specific to Investable, Indiana. Contributions into an account can be made by check, electronic funds transactions, or recurring contributions. Contributions must be cash and cannot be, for example, a bond. If the $450,000 limit is reached, then the ability to contribute into the Investable Indiana account is temporarily suspended until the funds are reduced in the account. In terms of rollovers from 529 into 529A or ABLE accounts, this was recently allowed for. So if a family started saving for their young child to go to college, and later it became evident that perhaps college may not be an option, or a different type of savings was needed for the child, you could roll over funds from their 529 college savings plan into their ABLE account. With that being said, it is currently suggested within the state of Indiana to wait on rolling over funds from a 529 in Indiana to an ABLE account, just to make sure there are no tax implications as a result of the rollover, given the state tax credit that may have been received in the under the 529 account. But we will be sure to update this as soon as clear guidance is received on this rollover option. But if you were to have an ABLE account or 529 account in another state, you can certainly, given the circumstances and the allowance or the abilities from that 529 plan, could roll over a 529 plan from another state into an Investable Indiana account. And you can even roll over from ABLE account to an ABLE account. So if even though there's only one account allowed per owner, you could roll over an ABLE account in another state into an Investable Indiana account. For Able to Work, this piece of legislation allowed for recently gives individuals who have earned income the opportunity to contribute amounts over $15,000 into their Investable Indiana account. So the additional contribution amount for individuals who for an individual who has earned income can be whichever of the following is less. So either the individual's annual gross income or the federal poverty limit, which is currently $12,060. So for example, if an individual works and earns, say, $10,000 a year, they can save up to $20,000 in their ABLE account that year. Sorry, I guess that would be a different amount. But they could save an additional amount up to whatever they're earning that year. But if they earn, say, for example, over $15,000 a year, they could only save $27,060 a year. So the $15,000 annual contribution limit plus either the individual's annual gross income or the federal poverty limit, again, whichever is less of those two. With Investable Indiana, we understand that investing can be confusing under any circumstances in life, so we've tried to make it as easy as possible. We offer 6 investment options, from aggressive options to more conservative options. So we really have choices for every investor. A 7th option that we offer that is unique to our plan is a checking option that allows people the option for direct access to funds that they may need for daily transactions. So we have we allow for the ease of access to your funds. It's important, I think, for beneficiaries to communicate with potential contributors and supports such as friends, families, doctors, providers, other specialists that they may be working with to determine what their needs are and what they need to save for or want to save for. Think beyond where you are now and what you may need in the future even, and how you want to and can best use your account. Ask the supports in your life to help you sort of paint your picture and determine what you would like to save for. With Investable Indiana, there is no residency requirement, so people from other states can enroll in our plan. Some states do restrict to in-state residents only. We offer easy to understand investments. This is just an overview of the options that we offer, the 7 different options we have. The investment options are currently comprised of target allocations to mutual funds and ETFs sponsored by BlackRock, Schwab, Vanguard, and additionally Sallie Mae Bank provides the high yield savings account and the applicable target risk options. The checking option is provided by Fifth Third Bank. With that being said, an individual, if they were to utilize that option, they do not go to Fifth Third Bank to open the account. They would still go online to the Investable Indiana website and enroll there. But they would get a debit card or checks to use under that option, and even be able to go to an ATM to withdraw funds. And there is an ATM locator on the Fifth Third website, so that if a Fifth Third Bank wasn't available in their area, they could find a fee-free ATM to utilize. And it also is important, going back to that checking option, to note that it does have the same FDIC rules and regulations as a traditional bank or savings account. In terms of different allocation changes, federal requirement only allows 2 allocation changes per year. We have simplified that by offering systematic exchanges. You cannot move money freely from investment accounts to the checking option without the systematic exchanges, but you can take a withdrawal from any investment option at any time. So there are no limit to the withdrawals or disbursements. This can be, a withdrawal can be requested online or by phone. We just ask that you allow up to 10 business days for the funds to reach the payee. The payment can be made by check or ACH to the account owner. So in terms of the different investment options, some families with younger children may be more interested in growth options. Some individuals may need to use their Investable Indiana account more transactionally or even to supplement their retirement. But our debit and investment options allow for this flexibility and ease of access. So like I mentioned, we have low fees associated with the account. An Investable Indiana account can be opened with as little as $25. Being that it is an investment option, there are low annual asset-based fees that currently range from 0.34% to 0.38%. There is in terms of account maintenance fees, it is either $5 a month, which is actually deducted on or charged on a quarterly basis. So this would be $15 a quarter. This amount can actually be discounted by $3.75 a quarter or $1.25 a month if the account beneficiary enrolls in electronic delivery of statements and notifications. So in summary, it's either $60 a year or $45 a year for the account maintenance fee if they again choose to enroll in electronic delivery of statements and notifications. If an individual or account beneficiary is using the checking option, there is a low $2 a month fee if you're invested in this option. But this fee can also be waived if you maintain an average daily account balance of over $250, or again, enroll in the electronic statements electronic statement delivery with Fifth Third Bank. So our website is in.savewithable.com. There are 3 very easy steps to open a new account. We encourage you to read the program disclosure statement. There is a lot of important information in this material. And then choose the best investment options for you and what your savings and disability related needs are. Then you need to gather certain information to enroll. That information is the following: a residential street address, a Social Security or taxpayer identification number, the individual's birth date, and a personal bank account number to pre-schedule contributions from a personal checking or savings account. So make sure you have this information ready to go upon enrollment so that you can complete the process. Again, the website is in.savewithable.com. Go there to enroll or request additional information. It's important to type in the web address as it is listed there, otherwise you might get an error. And again, you could open an account with as little as $25. It must be opened by an authorized individual or the beneficiary. Again, an authorized individual is a parent, guardian, or authorized power of attorney. Be able to verify that the eligible individual has a qualifying disability, so that's self-verification. It will not be requested, that self-verification will not be requested from you at the time of enrollment, but in case it is requested at a later time, we ask that you have it readily available. And then choose from the multiple investment options designed to meet whatever your short or long-term investment needs might be. And then family and friends can contribute into an account to assist them in an individual in saving for qualified disability expenses. This is important legal information and just some important information to disclose, stating that neither Investable Indiana or I are qualified to give legal or tax advice. You should consult with such parties in regarding your specific legal, investment, or tax situations. Ascensus is our program manager, and this is the same as with our 529 college savings plan. And additionally, this material is for educational purposes only and not intended to provide legal, tax, or investment advice. So to touch on a few frequently asked questions, I'll just go over a few of these. This is certainly not an exhaustive list, and some of these questions and information will recap material that has already been covered. So to start with, do I have to prove eligibility? No. Again, you should be able to, you should have a record of the doctor's signed diagnosis or a benefits verification letter from the Social Security Administration, or other relevant documentation for account verification is needed. Do I have to prove that withdrawals are for qualified disability expenses? Not at the time of the withdrawal. You do not have to prove this, but annually, Investable Indiana will report the total amount of your withdrawals to the IRS and the date and amount of each withdrawal to the Social Security Administration. In the event that either entity wants to verify expenses, it is recommended that you keep detailed records of the expenditures from your account. Another question frequently asked is, how much can I contribute to the account? Again, we did touch on this, I know, earlier, but just as a recap, you can contribute up to $15,000 a year. Once this amount is reached, no further contributions can be made until the start of the next calendar year. The account balance limit is $450,000, but if you're receiving SSI, it is $100,000. I think I skipped a question up there, and that was, can I have more than one Investable Indiana account? No, you are, again, limited to one account per person. But this does extend beyond Investable Indiana to include other accounts and other programs. So in the case of a rollover from an ABLE account for the same account owner, the account from which the funds are being withdrawn must be closed within 60 days of the withdrawal. How often can I change my investments? You can change your investments 2 times per calendar year. You can change your investment options for any new contributions at any time. Can friends and family make contributions into my account? Absolutely. Anyone can contribute, no matter who does, who contributes, either the account owner or the authorized individual. No matter who contributes into the account owner or the authorized individual always retains control over the account. What is a recurring contribution? So these are contributions of a specific amount made automatically into your account on a custom frequency basis. For example, you can set up recurring contributions of $25 per month. So this makes the process of investing very simple. What is in a systematic exchange, for that matter? This automatically moves funds from one investment option to another. And a systematic withdrawal is a way of making automatic withdrawals such as when you'd like to use your account to make payments each month. So you can make systematic withdrawals to the bank listed on your account by mail to your address or to a third party. A very common question that I get is like, what are the differences between an ABLE account and a trust or a special needs trust, and can the two be used together? So the biggest difference between an Investable Indiana account and a special needs trust is tax efficiency. With ABLE, income and distributions are tax-free if used for qualified disability expenses. ABLE accounts are significantly cheaper to establish and administer. Additionally, ABLE accounts offer a greater level of control and flexibility, so there's no third-party administrator with an Investable Indiana account. There are certainly benefits to both, and they can and absolutely certainly can be used and should be used together if it is within the means of that individual and their circumstances. And again, is there a residency requirement for Investable Indiana? No, you do not have to be a resident of the state of Indiana to enroll in Investable Indiana. Some states do limit enrollment to in-state residents only. So in sum today, I will give you our website again, which is in.savewithable.com. You can go here to learn more about the program, to request an information kit or enrollment kit. You can enroll online at the website, or request a paper enrollment form. The phone number for client service is 888-609-3457, or you can even email them with questions at in.clientservice@savewithable.com. Please don't hesitate to reach out and contact us if you have any questions or need additional information. If you would like brochures sent to an organization that you represent, we can certainly do that. Client Services is an excellent resource for walking someone through the enrollment process, helping to answer additional information or additional questions and the like. You can also contact me. Again, my name is Amy Corbin. And if you have additional questions, my email is acorbin@tos.in.gov. Again, that is acorbin@tos.in.gov. You can even reach me at 317-232-1614. Again, I thank you for listening today, and I hope you have found this information useful and informative. And please don't hesitate to contact us with any questions.